This trading strategy is boring, but it consistently gives me payouts like this and like this. And it's so easy that even beginners can't mess this strategy up. So in this video, I'm going to walk you through the full strategy step by step so you'll know everything you need to finally become a profitable trader. And at the end, I'm going to show you 1 month's backtest results to show you how much money you could have made if you were trading this for 30 days. So let's get into it. Identifying key levels on the 5-minute time frame. This is the whole foundation of the strategy. And this technique is how you know where to trade so that you can win 60 to 70% of the trades that you take. These key levels that we're talking about are simply just areas in price where there has been significant reactions in the past. And you can use these key levels on any instrument at any time. But for this specific strategy, I only trade these 3 instruments at these specific times because they give us the best results. So the instruments and specific times that we're talking about is New York session, which is personally the one that works with my lifestyle best. And we trade NQ futures or we trade NAS 100 if you're trading CFDs. All at New York session, which is 9 a.m. Eastern Standard Time. The other session you can trade is London session, which is 8 a.m. London time, okay? And you can trade the DAX, which is German 40, or you can trade GBP JPY. All right, so we're going to identify some key levels on the 5-minute time frame. We're here at market open at 9:30 a.m. Eastern Standard Time. You can see here it says 3:30. That's just in my time zone. It's the same as 9:30 a.m. Eastern Standard Time. So let's identify where the market has reversed from multiple times. So you can see we've had a reaction here. We've had a reaction here. It's pretty obvious where we've had multiple reactions in and around. We've got them down here. So simply what I'm going to do is mark this up here. What you're going to want to do as well is be kind of accurate as to where you're drawing these zones so that you get the high of the candle like so. And I'm going to include some of the wicks around it. It's not an exact science. What really is important is getting the highest high accurate over here so that you can identify the break. Now I'm going to look at the lower zones. On the lower zones, we've clearly got multiple reactions. So we've got reactions here, 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 and recently here and here as well. So what we can see is we've got something down here. So I'm going to mark that out with my tool here. You can see there's multiple reactions. Why am I choosing this one down here? Well, it's the one on the extremity. If I chose these, we would have hardly any room here to trade with. So I'm going to mark this on here. Okay. Step number 2 is to wait for the breakout on the 5-minute time frame. So we've got these 2 levels. Once price breaks out like it has right here, we can then look to participate in the trade. But we don't want to enter just as it goes through. You need to see 3 things first. Okay. And this is where most traders either enter too early or get stopped out. So you don't want to be doing this and leave a ton of money on the table. And it's because they don't have these 3 confirmations I'm about to show you. And they've helped me make over $150,000 trading this strategy. So make sure you pay attention. So the first confirmation you want to see is the 50 simple moving average. Okay. And since we are looking at short positions here, we need it to be below the 50 moving average. So price is below the 50 simple moving average. You can see I have it added to my chart right here. SMA, you add it to your chart and you put the length at 50. Then we want the 5-minute candle to break below the level, okay? It must break and close below that level, okay? So whether it be this level or this level, it must break and the candle must actually stop printing and close. This stops you from getting involved too early and then getting faked out, okay? This is essentially going to tell you whether the buyers or the sellers are actually in control, and it's a strong sign that the move will continue in that direction, okay? So after the last confirmation, after that 5-minute candle closes outside the level, you want to look for price to come back down and touch the level again. This is called the retest. Now, once you see price retesting that zone, that is your green light to enter the trade. Okay, so we would enter the trade in this example short down here, and we look to put our stop loss anywhere between 20 and 25 pips or points in the case of NASDAQ. Okay, so it depends on you. In this example, we can go for a full 25 so we can cover as much of this big candle as possible. So you need to look to cover as much as possible. If there's smaller candles, you can look to go with a 20 pip, but we don't go below that in general. Okay, 20 pip or 20 points. Okay, same thing. Then we look for a 1 to 2 risk reward ratio on this particular trade. Okay, so that we can maximize our wins. We're winning more than when we lose. We also go break even at 1-to-1 risk reward. So once price moves 1-to-1 risk reward ratio, we will put our stop loss at the entry and then wait for price to hit 1-to-2. Okay. Now you'll see price then retests that entry over there, and that is when we would enter the trade. Now, if you entered into this trade over here with $1,000 here, okay, of risk, meaning if your stop loss gets hit, okay, for $1,000, you would lose $1,000. Well, this particular trade goes on to hit our take profit really quickly, and you would have bagged yourself $2,000 on this particular trade over here. And this strategy works well on its own, but in a second, I'm going to tell you about my other secret bonus to increase the win rate hugely. And I highly recommend that you add this to trading this particular trading strategy. Now, I know that when I was starting out my trading journey, I learned my best when I was watching live trade examples of the strategy play out. So to help you go into the market with the most confidence, I'm going to show you real trade examples of the strategy playing out and show you how much money you would have made if you were trading this strategy. And this strategy alone works really, really well. But in a second, I'm also going to show you my secret bonus to increase the win rate. I highly recommend that you pay attention to how that works. Right, so first things first, we're going to be looking at this example. We're going to be looking, first of all, for our 5-minute zones, these all-important 5-minute zones. Now, essentially what we're looking for is these reactions that have buddies that are next to each other. So essentially, we've got a big reaction right here and a big reaction right here. Now, why don't I choose these reactions down here? Well, they're not at the extremity of price. This is clearly at the extremity, and we've had the largest reactions over there. Okay, so I'm going to be choosing this as my upper zone up here. Okay, you can actually include this wick up here. So if price broke above here, we would be looking for buys. Okay, then we're looking at the lower zones. So we've had multiple reactions up here. We've had reactions here. So essentially, I'm going to be choosing that as my lower zone. Okay, and also bearing in mind, market open happened over here. Okay, so this is all after market open, and this here is the zones we're looking at, and we've had reactions here close to that timing as well. So we had price breakout right here, right now, okay, and it's closing below. We've also got price under the 50 simple moving average. So that's 2 out of 3 of our boxes ticked. And now we're going to wait for the third box, the third confirmation, which is price retesting our zone. So we would wait for price to retest the zone. We're going to put in our take profit and stop loss. So we've got 25 here. Why 25? Because these are fairly large candles. So we're going to want to use the maximum size. We can go for 20 if these candles were much smaller, but they are not. So we're going to go with the larger stop loss size. So we have price tag us in right here and reject nicely. And we push down to our take profit on this particular trade. Now, if we were risking $1,000 here for our stop loss, so if we hit the stop loss, we would lose 1K. We would then inversely make $2,000 when we hit our take profit down here. Now, I'm sure you can do the maths on that on your own, but the positive risk reward ratio works super well. So let's have a look at the next example. Essentially, we're going to look for our two zones once again. You can see we've had a massive reaction over here, and next door we've had another reaction, which we will class as our friend candle. Okay, I like to call it our buddy or friend candle. It's not enough to just have one reaction. We want to have at least another reaction nearby. Okay, so that's a good tip for you guys on finding your levels. So we've essentially got this level right here, and it's tapping into this other reaction down here. Now we're at market open right here, and at the open we have price break through the zone. Okay, and then we're looking to get involved in a trade over here. Okay, we're going to want to use the full 25 point stop loss. Okay, and we're looking for 1-to-2 risk reward ratio. Okay, so we're above the 50 simple moving average. That's our first condition met. Our second condition is that price has broken and closed. The 5-minute candle has closed above our zone. Okay, and now we're looking for the retest. So as you can see, price comes back to retest. It taps us in over here. We would have entered as we come back down, and then we hit our take profit over here. So had you risked $1,000, okay, you would have made $2,000. Similarly, if you're risking $2,000, you would have made $4,000 on this particular trade. Remembering that we go break even once price reaches the 1-to-1 risk reward, which would be roughly over here. Okay, so that is another example of this trade strategy playing out. Now, as you can see, the strategy is pretty good, but for this third example, I'm going to show you my secret trick to boost my win rate and avoid unnecessary losses. So this is by identifying 4-hour key levels. Now, these 4-hour levels that I'm going to show you are one of the biggest reasons I'm able to be consistently profitable. And that's because they tell me when not to trade. So too many beginners are only focused on when to get involved in trades and when to get into the market. But real profitable traders know that being profitable is about knowing when to stay out of the market. So you're going to know exactly how to use these levels and how to draw them on the charts in just a couple of seconds. Let me show you how they work. But first, I want to show you, we're going to go through the initial stages of finding a setup, which is finding the 5-minute zone. So here we are here at market open. We've got a clear reaction here on the extremity of price. We do not want to go into the middle here because there's simply not enough room for us to take any trades, and we're currently down here. So we've had a reaction here and we've had a reaction here. So we're going to mark out this zone right here, okay, which we're very close to breaking out of, but not quite yet. We've had a wick, okay, we've had a wick below, but we have not broken and closed. Then we're going to look for the upper zone, which cannot be any of these zones here. Cannot be any of these because there's not enough room to get involved in trades. It's just too messy. Plus, there's no companion candles for these zones. So we've got these reactions up here. You can see we've reacted multiple times at this level. So I'm going to choose this up here, as well as the fact that we are at the extremity of price. We're at the edges of the range, okay? Plus, we've got a ton of space before we get to this zone up here, okay? So that is our upper zone, right? And now we're simply going to wait for price to break out of either of these zones. And it needs to be, for buys, above the 50 SMA. And for sells, it needs to be below the 50 SMA. Okay. Then we're going to wait for price to break and close above or below. However, if we throw in the 4-hour zones, this is where things start to get interesting. because the 4-hour zones give us a guideline on where we can and can't trade. So we're simply looking for something very similar to what we look on the 5-minute, which is reactions. So you can see here we've had multiple reactions here on the 4-hour time frame. And so I'm simply going to mark this out as our 4-hour zone. Okay, now if we go back, we can see that we've had multiple reactions over here. And so I'm going to mark that on as our 4-hour zone. Okay, it's literally that simple, guys. We're just simply wanting to take trades only within this. And when we get down to here, for example, and let's say we have a range down here that we're wanting to trade, we are not going to want to take sells into this brick wall. Similarly, we're not going to want to take buys into this brick wall. So it gives us an idea of how much space we have to trade within. So if we go down to the 5-minute here, we can see that we have space all the way up till here to trade, over 85 pips. And down here, we've got space all the way down to here, over 130 points that we've got to trade with. So it gives us a very good guideline of where to trade. And remember that if we were, for example, down here, very close to the zone, we would not be taking sells into this. We would only be looking for buy trades. Similarly with this up here. So let's have a look at this particular trade example. We know we've got enough space. So you can see here, we do not break below this zone at the bottom, okay? And now we're just simply waiting for it to hopefully break out of the top. It does break out of the top here. So we would look to get involved as we retest. We are above the 50 SMA, okay? So everything is valid. So we're going to put on our 25 pip stop loss, and we're looking for a 1-to-2 risk reward ratio. So we wait for it to come and retest. It retests, it pushes back up, and we hit our take profit. So if we risked $1,000 here, we would have bagged $2,000 up here. And if you tried this trading strategy for over 2 months straight, here are the results you could have gotten and how much money you could have made. And this is based on our live trading streams, which we trade every single day. And each trading stream is video recorded for full transparency and posted in an archive, which goes back over a year now. So here are our results for the first week of June. We made over 6R, meaning if you risked $1,000, you would have made $6,000 in this first week trading German 40 and NASDAQ. Then on the second week, we lost 1R, which would mean $1,000 lost if you were risking $1,000. The same for the third week, we lost 1R as well. Then on the fourth week, we made plus 6R, which means if you're risking $1,000, you would have made $6,000 for a total of 10% return for the month of June, which is 10R, $10,000 if you're risking $1,000 per trade. And this isn't just hypothetical money that we're talking about here. We have real students that make real money with this trading strategy. We just mentored Jamie one-on-one, and he went on to make over $28,000 this last month trading prop firms and our trading strategy on real funded prop firm accounts. So if you want to apply to be mentored one-on-one, getting access to me and my team, just like he did, then click the link in the description down below to apply. Cheers, everyone. Thank you for watching.